Closing on the lows of the week as we go into the final week of the month. My name is Blake Morrow, and you are listening to the Week Ahead in Trading for February 23rd, 2025. And the markets are actually closing in on the lows. I'm filming on a Friday, and we're about ready to go out on the lows of the week, getting near 6,000 the S&P. The FX market's been pretty quiet, but we are seeing some yen strength as we head into the end of the week as well. You know, there's a lot going on this next week. Most importantly is we're going to get the PCE data that the market's actually looking at and paying pretty close attention to, because that's what Fed Chair Powell said the market should be paying attention to when it comes to inflation. But we also have other things happening, like the German election at the beginning, well, it's actually on Sunday. That could have an impact on the euro, could have an impact on the dollar, therefore. There's other data that's going to be happening this next week, and NVDA is going to be reporting earnings. Matter of fact, we're going to bring in Nick from Trading Analytix. He's going to talk about NVIDIA and the S&P and the broad markets as well. So make sure you stick around for that. So what I'm going to do is I'm going to get you guys all ready for this week. And I'm actually going to start by going through, you know, all the key events, and you can actually follow along via the calendar with Forex Analytics. As a matter of fact, if you haven't tried out Forex Analytics, make sure you do so. It's only $1 for 10 days to try it out. Download the mobile app. Get all the analysis. We cover not only the currency market, we cover all sorts of markets, from crypto to the DAX, as the DAX has shown a reversal this week, the S&P, gold, crude, and more. So you can get all different types of analysis here on all the different markets, whether you're talking about advanced analysis like harmonic analysis, whether you're talking about Elliott wave analysis, live charts, basic technical analysis. You got all these tools like the live squawk feed. And as you saw just a moment ago, you can see that we have the data flash that lets you know news as it's coming up. And then plus you get access to the Forex Analytics chat rooms, which happen to be probably the most active chat rooms in the markets. And you can get other people's analysis, not just our analysts at Forex Analytics. So make sure you join and try Forex Analytics. $1 for 10 days. All right, so let's talk about some of the key events this next week before I bring in Nick. You know, next week, like I said, we have a German election, and I want to take a look at the euro, because the euro dollar it's actually had a really, really great week. And we talked about how important it would be if the euro made it. And remember, these are the week ahead charts that we use only here on this particular video. We're looking for a move up towards the 106 level, and that's major 38% retracement. We haven't quite got there yet, but depending on what happens with the German elections, we could trade up to there early this next week. But you can see we've had a bit of a week of a consolidation, and I think it's pretty simple from here. You know, above 106, it gets really bullish, but you also got to see this 50 DMA. That's what kind of held us as support this week. So as long as we are holding above the 50 DMA, I don't think there's any real reason technically to be bearish. But like I said, the German election and the outcome of the German election, depending on how far right or left leaning the coalitions are, could have a really big impact on what happens with the euro going into this next week. But not a lot's changed from last week's analysis regarding that. Now on Tuesday, we're going to have Australian CPI. I'm going to take you over to the Aussie dollar, because we were looking for it to have a bullish breakout till we hit that 38% retracement. And guess what happened? We hit the 38% retracement. And actually, we almost got there today. Before we're showing a bit of a reversal. Obviously, with equities down, the Aussie dollar is seeing a little bit of selling pressure, but really highlights how important this 38% retracement, you can see it right here, how important that 38% retracement is in the market. So with inflation data, and by the way, the RBA did cut rates this week as expected. We talked about it this last week. But inflation data, especially if it's hot, could have a very positive impact on the Aussie dollar. We could see the Aussie dollar break above that 64.20 level key resistance. Now on Thursday, we have US GDP. I will take us over to the dollar index. One of the key components of the dollar index this week, and actually as of today, let me get rid of this. I use these charts with the normal analysis on Forex Analytics. When I'm using Trading View, you can see I have different lists for different things. Like this is the week ahead list. So I only use these charts with you guys each and every week, and I make adjustments that way. But on my normal daily shows, I use a different list. But the dollar index is a currency or is a chart that we use universally. And you can actually see the dollar index chart is the same one that's uploaded here on Forex Analytics. What you're going to notice is yesterday we closed at the 38% retracement. Okay, so we closed at 38% retracement, and we're finding some buyers there. And this is going to be really important going into this next week, because on a break below a 38% retracement, that means that this trend that has been higher is more than likely going to continue to retrace even further. We're probably going to see the 200 DMA, which I think is going to be really critical support on any further weakness in the dollar index. And just so you guys can see here, it is also, and I'm going to zoom in here, it is 161% extension of the most, that spike higher. The 161% extension would take us right around the 105.20 level, which happens to be the secondary flag pattern. Whoops, not there. Let me grab the other flag pattern. You can see here, this is the flag stick. It'd be the other flag pattern target would be right around the 105.20 level. So you can see a lot of targets down there. So should we get down to those levels, you got to imagine there's going to be some buyers down there. We're finding buyers ahead of the 38% retracement, and especially taking into account that tariffs on Mexico and Canada are set to take place over the course of the next week and a half. At the beginning of March, we could see some dollar buying coming in ahead of that for sure. So that would be my biggest hesitation as we go into the end of this next week. With any type of dollar weakness, the dollar might start to firm up as we get close to those levels. Moving right along for the rest of the week, as you're following along, we have German CPI on Friday, Canadian GDP, and then US PCE, and that's going to be the most important data of the week. But I want to take you over to the dollar CAD, because the dollar CAD, even though we've seen a reversal like we expected this last week, it's basically just been a consolidation. You can see how it's just kind of consolidated. Hasn't made it lower to the 127% extension, and I believe there's some hesitation even with we had Canadian data that came out today, and with the stronger Canadian retail sales, it failed to give the Canadian dollar much of a boost lower. And so keep an eye on the dollar CAD, especially with GDP on Friday of this next week, and with the tariffs set to come into play at the end of the month as well. Now, there's a couple other charts I do want to take you through, but what we're seeing a lot of is we're seeing a lot of volatility, and you can see the VIX today is screaming. Now, one of the best ways to take advantage of volatility is through the trader funding program. So there's a couple ways you can do it, and as of this week, the trader funding program, oops, let me go ahead and turn that off. I didn't mean for that to go. There we go. The trader funding program, there's two ways you can take advantage of it. You can take a one-step assessment, or you can go immediately to a live trading account. Even if you're in the US, it is now applicable that you can go directly to instant trading accounts. So make sure you check out what's best for you. Whether you want to take a one-step assessment, that means all you have to do is make 10% without losing more than 6% on a high watermark drawdown basis. That means every time you make money, you can't lose more than 6% of that level all the way up until you make 10%. Or you can access live trading accounts immediately. And by the way, the one-step assessment, you have unlimited amount of time. And while you're utilizing the trader funding program, you can actually have access to Forex Analytics at the same time. You have access based on which account you're looking to qualify for. So for the one-step assessment, you have either $25,000 accounts all the way up to $1 million accounts. Then with the no-step assessment, going straight into live trading accounts, we don't offer as much as 1 million, but check out the different accounts that are available to you, especially if you want to take advantage of volatility. The trader funding program is where it's at. Okay, continuing on. Now, I want to cover a couple of different markets. I'm going to cover the S&P. I'm going to cover gold. I'm going to cover what's happening in Bitcoin. And I also want to talk a little bit about the yen, because I think the yen, before I actually bring in Nick from Trading Analytics, I do want to talk about the strength that we're seeing in the yen. So what we're seeing in all these yen pairs, and the euro yen is a great example of this, is we are slumping towards major support here in the euro yen. And we've got to be careful, because these yen pairs are all on the cusp. And let me go ahead and draw you some of these support zones. So you can see the euro yen, we're coming into some major support here, but it's not just the euro yen. Take a look at the dollar yen. The dollar yen has been following this descending channel quite well in the last several weeks. And even though we're very close to support, the dollar yen is one I do want to spend some time talking about, especially in the days ahead. Matter of fact, if you stick around, I'm going to cover one of my major trading setups going into next week regarding the US dollar Japanese yen. So stick around for that. So the yen is going to be in a lot of focus as we go into this next week. But before I go on, I'm going to bring in Nick from Trading Analytics. So here you go. Stand by.
What's going on, everybody? This is Nick with Trading Analytics. Blake, thanks for passing it over to me. I'm going to go and talk a little bit about the equity market. So we're seeing quite the Friday session with the S&P down around 1.4% at the moment. Didn't seem to like that data this morning or the sentiment report. So let's talk about it, because I do think this is a very interesting and key development. So the equity market's closing lower. I think on the week we're going to be on the lows here in this red candle. So negative sign. I was thinking that we really needed to hold this 60-80 level or so. At the time, that was a bit of a 38.2-ish zone, and it's now sliced through there, sliced through the 50, sliced through the 618, trying to hold the 786. But basically, we have created now a false breakout. And false breakouts do typically lead to breakdowns. This is a negative development for this asset, and I have been long since CPI in January, and I just closed out my longs. I think there's a chance that we could see some February seasonality pickup, where the second half of February tends to be weaker in this current environment. So yeah, I would say that the 6K level, though, is going to be really important from a larger perspective. The 6K level is the 38.2 as of right now. So this level really needs to hold for bulls. If it gives way, I think it's likely, all that deep seek tariff, those could all resurface as concerns and see the market head lower. And a big thing that we need to get through next week is going to be NVIDIA earnings. So we have NVIDIA earnings on the 26th of February. Right now, there's some other instruments that are pulling back. I'm not too concerned about NVIDIA at the moment. I would say it needs to hold 131 to 128. Somewhere between this 50 and the 38.2, you have a spike low here from December. Also acted as kind of the breakout level. So this needs to hold next week. And if it doesn't, and you start seeing semis slip, maybe back below support in SMH at 245, that could cause some serious concern in this market. I mean, the semis have been a huge driver for this market, so it really needs to wake back up. So definitely keep up those levels. I will say, though, if NVIDIA somehow breaks above 145 and gets going, this market could be off to the races. Maybe dips bought at 6K and everybody's put back on their heels, because sentiment in the market is overall still quite bearish, which is uncommon near the all-time highs. So there's a possibility that we do still get a rip up. These levels have been used as kind of traps. Or I've noticed when we have very low bull sentiment, it's kind of been traps to move higher. So food for thought there. One of the Mag 7s that's really concerning me right now is Amazon. Amazon, I felt really needed to hold this 220 level. It was a previous trend line resistance, now support. Now has caused a false breakout, and it's slicing lower. I will say there's a gap fill at 213 and also 618, so that's going to be now very key support for Amazon. But I also felt like 220 was key. So now we're in an environment where, you could see us trade down here, bounce up, and then reverse. I might be trying to play equities to the downside. So if you're looking for more updates, check us out on Trading Analytics. We literally just talked about this recent move being a trap for February seasonality. So we try to keep you guys up to date. With that, I'm going to pass it on back to Blake. Hope you all have a great weekend. Cheers.
Well, thanks, Nick. I appreciate your analysis, and I know everybody else listening in does as well. Make sure you get down in the comments section below. Tell Nick thank you. Give him a big thumbs up if you're watching us on YouTube, and subscribe to this channel so you don't miss any of this exclusive content. All right, so what we're going to do is we're going to cover a couple of different markets. Like I said, I covered the yen to a certain extent. I'm going to be coming back to that, but I do want to talk about the S&P and the way I'm viewing the S&P right now, because the S&P did sell off a little bit. And one of the things about this chart, and Steve Valgeris, he has actually been looking at this as a slight ascending channel in the S&P. And I don't disagree with him here, but that means that we have a pretty far distance to go before we find some major support in the S&P. That could be all the way down around 5,800. The other way you can be looking at the S&P as well is we have broken out of an ascending wedge, which means that there could be some downside pressure. It takes us all the way to 5,900. So anywhere between, let me just show you guys this, 5,900 all the way down to about, 5,900 all the way down to about 5,800 is where you're going to find some major support. And just taking a look from this low here to this high, the 618 retracement also coincides with this 5913 level. That's the same level that we're looking at if you're in Forex Analytics and you're looking at the analysis here. You'll notice we're still staring at this 5910 level. It's really, really important as far as support goes with the S&P. Nothing's really changed. Considering the fact that we've come out of an ascending wedge, that means it could give us a move all the way down to about that 59.15 level. If that breaks, channel support comes in around 5,800. So keep an eye on those levels going into this next week. Also, a couple other things I did want to cover with you guys. I do want to take a look at, we talked about Bitcoin being in a potential Wyckoff distribution pattern, long-term distribution pattern. But what you're going to notice here is now we're developing more of a triangle formation, which still could play into this distribution pattern, especially if we start breaking through triangle support. So keep an eye on Bitcoin going into this next week, especially if we take out that triangle support. That means that we're probably going to test 90,000, which is going to be extremely critical for the bulls to hold going into this next week. So I wanted to go through Bitcoin. I wanted to show you gold. Gold continues to struggle around the 161% extension. Before I was looking for a bit of a double top. It still is just kind of consolidating near these highs. Nothing's really changed other than we keep brushing up against these highs here, and I don't see it as turning bearish just yet. But at the same time, that channel, may cap it, especially if we make a brief new high in the market in the days ahead. I told you I was going to cover crude oil. Crude oil continues to find support at this trend line. And let me just take it right over here again. And we're just going to move these arrows over. You're going to see the $70 level. We're basically on it right now. If we get much below 70, that's going to open up some downside in crude oil. And I think that's worth noting as we go into next week's trading week. All right, guys. Well, what I'm going to do is I'm going to prepare you for this next week with your review of last week's trade setups, and I'm going to give you 3 trade setups for this week. And if you like this video and you think it's going to be beneficial for you getting ready for your trading week this next week, make sure you give us a thumbs up. Give the team a thumbs up, because the team is the one that really puts this all together. Make sure that you guys get delivery of this video ahead of next week's trade. So give them a thumbs up, subscribe to the channel if you're watching us on YouTube, and it's free to do all those things. And comment down below if you agree with the setups I'm about ready to talk about. All right, so the first setup that we're going to talk about is we're going to talk about last week. Last week, I was hoping that the dollar Canadian would drop down towards 140 and give us an opportunity to be on the long side. down there. That still has not happened. That means it still could be on the radar. But the move down to 140 did not happen, so that trade setup did not play out. So one of them just didn't happen. Okay, that was number one. Trade number two, short gold on a double top only below 2860, and then looking for a move to 2800, and it would be counter trend. Well, obviously that didn't happen either. If you look at gold, we just basically maintained gains above that 2880 or 2860 level that I gave you last week. And so while we're above that level, there's no double top. So, trade setup two, nothing happened. So it didn't work, didn't pan out because it never even set up. Now trade setup number three is going to be the same. I was looking to short the euro at 106 with a very tight stop and reverse, but the euro dollar didn't quite make it to 106 either. We just stalled around the 105.15 level. So, if you think about the previous week, I gave you three setups. They all triggered. They all worked great. This week, I gave you three setups and none of them even happened. So, no loss, no foul, just kind of wait. Sometimes you wait around as traders. You wait around for that trade setup and it never happens. You just got to move on to another potential setup. And sometimes, they just don't happen. All right. Well, let's hope this next week is going to give us some better opportunities. So this week, I'm going to give you my top three setups of the week. First one, I still want to short the euro dollar if it is near 106. So if it gets near 106, I'm looking for a short around the 38% retracement, same setup as last week, and I will stop and reverse if it breaks out to the upside. Okay, but you want to keep a very tight stop should we get up there. And the reason why we could get up there this next week is because of the German election that's happening on Sunday. We get something that's positive for the euro. The euro could pop and gap up towards that 106 level as early as Sunday. All right, trade setup number two. I'm looking to sell the dollar yen on a move back to 151 or 152. I'll take either one of them. So 151 is about right here. Right about there is 151. And then 152 is going to be right up at these levels. So basically what I'm trying to do for this next week is I don't want to sell the dollar yen as it's down here. I want to wait for a bit of a move higher and sell into strength. So I'm going to look for a short somewhere up in those levels. Now, I do believe the dollar yen is a great short, and I think the yen is a great long, but chasing it down here at these levels doesn't make much sense to me. It doesn't mean it's not going to continue to go down, but it's not the trade that I'm looking to trade, to have FOMO, if you will. All right, trade setup number three, which is actually taking place as of right now, but I think you probably want to wait until Sunday. I'm actually looking to short the Nikkei below, I guess it's kind of holding up right now, below 38,000. So right here, below this trend line and below this support, if we break through 38,000, and that's going to go hand in hand with further yen strength, I think the Nikkei is a great short. So once again, I'm looking for a short. Let me grab this drawing tool here, below 38,000. I know a lot of you guys trade CFDs and you have the ability to do that. Some of you might trade instead of trading the Nikkei, you might trade the yen long. That's another idea. But Nikkei below that 38,000, I think, is going to be a breakdown. I think what we're doing is we're developing this very, very strong, really, really strong wedge and this big consolidation that's going to yield a pretty big move once we break out of the consolidation. Anyway, guys, gals, I hope you enjoyed this week's week ahead video. I hope you enjoyed the analysis that you got from Nick from Trading Analytix. And if you're not following Nick, make sure you get down in the video description below. Follow him via Twitter. Follow his YouTube, or follow him on his YouTube channel. And I want to thank you all for spending your weekend with me, your most precious time with me. And remember, on Monday morning, I'll see you guys on the F.A.C.E show. It's our free show. You can go to it right through our website. You can go right to the homepage, click where it says webinars, and then you can click the Flow Show is a free show, and then the F.A.C.E show is our free show that we offer every day at 8 a.m. Eastern. I'm live there with Dale, K-Man, Ryan, Steve, Stelios sometimes, Grega sometimes. So catch the whole team there on Monday. I'll see you then. Bye-bye. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.